Good afternoon, everyone, and also good morning to friends in Europe. So, our theme today is to introduce the first Asia Pacific Sustainability Bond Index. And I am Xin from CarbonCare Asia CCA. We are really glad to have the opportunity to co-develop this index with Solactive as a leading index provider. Today's webinar will be around 30 to 35 minutes. 10 minutes will be my sharing on our ESG methodology, like how we identify the eligible bond universe. And Wukash, the representative from Solactive, will talk about more on the index afterwards. So we will keep our introduction brief and to leave time for Q&A. So about CCA, we are a sustainability consultancy firm in Hong Kong and Singapore. We have been in this space for more than 10 years to provide service to corporates and financial institutions, including ESG data disclosure, the corporate sustainability performance improvement, and also sustainability sustainable finance solutions. So we're going to talk about the market overview first. So our focus is about the green bond, social bond, and sustainability bonds in Asia Pacific region. And you can see from the chart, the growth is significantly. And by end of 2019, the outstanding is at 187 billion, which is already doubled within 2 years. Among the universe, Chinese bond takes around 59%, followed by Japan, Korea, and Australia. And though, as the universe grows, we also see the challenges in the market. The first is about, you could see that there are a lot of standards on green, social, and sustainability bonds, and they do have some misalignment. And we see the needs of a harmonization of different standards. And the big issue is about the sometimes the definition and also the project categories are not aligned. For investors that can create confusion. And for example, for Chinese standards, the NDRC green bond guidelines still allow up to 50% of the green bond proceeds can be used as general working capital. And this is not matching with the international standards. And also, we also see the gaps between different issues on the issuing practice in terms of the transparency and the governance of the bond. So from our point of view, we think we should apply the filtering process to ensure the bonds can fulfill the international standard and to tackle this challenge of lack of clarity. And the second, the challenge or the issues we identify is from the beginning of this sustainable financial instrument. So no matter green bonds, social bonds, or sustainability bonds, what expected are the environmental and the social positive outcome from the process used in different projects. But we could see that for certain projects, there are potential negative impact which should be paid attention to. And here we present an example. It's about the large-scale hydropower project, which can lead to significant risk. For example, like the ecological damage and also the social disruptions. So apart from the long controversy from the civil society, these risks can also be translated into potential financial risks. So when we design our filtering process and the eligibility criteria, so we consolidate international best practice and different financial institutions best practice. We set the hydropower projects only when they are smaller than 25 megawatt. The bonds can be accepted. So to summarize, our framework or our screen methodology has two filters. So the first is like the bonds has to align with ICMA's 4-pillar principles. And the second is no working capital is allowed. And the third is about we have set requirements on mandatory external review. So external review is recommended in most guidelines, but we see the endorsement from the professional bodies, which can enhance the investors' confidence regarding the claims in the bonds framework. The fourth component in the first layer filter is we also require the mandatory update report and also the quantifiable impact measures in the report, as we see the investors' expectation on the disclosure as well as the impact. So for second filter, we applied the we call taxonomy for green bond and social bond, which is to determine the eligibility of the underlying projects. So just to mention, the large hydro power project is a case. And you can see from the bar pie chart in the right, and which presents what the filter universe, what the filtering process impact. So in total, there are 104 billion US dollar bonds being excluded due to the criteria in our filters. So for filter one, it's about 31% of the bonds are excluded due to the filter one. And the next slide, we can see the details of how the four components in filter one plays. So there are 35% of the bonds representing 11 billion US dollar bonds cannot align with ICMA's 4-pillar. And for working capital, there are almost 6 billion bonds have exposure to the working capital use. And for 5 billion, they lack of external review, while still have 10 billion bonds that they don't have updated report, or their report don't disclose quantitative impacts from their underlying project. So this pie chart presents how our filter 2 works. And we talked about the green project and the social projects we include. And you can see that there are almost 50%, 49% of the bonds involved with the fossil fuel related project, say the clean coal or some natural gas project, some LNG pipes can be categorized in this group. And this is the top contributor of the excluded bonds. And then we have one type we identified it can be controversial is about waste incineration project, but some project the technology is not best available, and actually it's outdated. Like they don't have energy captures for the waste incineration project, and it can indicate a big waste and also potential uh, GHG emission impact. And the this slide shows after the filtering process how the breakdown of different countries' bonds have. So at the beginning, Chinese bonds takes more than half of the universe, but as mentioned, due to the non-alignment of the Chinese guideline with the international guideline. After the filtering process, only 38% of the bonds are from China, while the rest of the bonds remains similar at their contributions in the universe. Our filtering process finished. Now I will give time to Łukasz to introduce more on the index side.
Thank you, Jing. So I'd first like to wish all the participants from Asia a very good afternoon, and to all the participants from Europe and other Western countries, a good morning. So we created this sustainability bond index together with CarbonCare. And before I delve into the index, I would actually give you a brief about Solactive as a company. So Solactive started back in 2007, and we have been developing tailor-made multi-asset class index solutions for ETF providers and other companies. And we are essentially a German-based index provider operating from Frankfurt, Dresden, Berlin, Toronto, Hong Kong to give a 24-hour coverage. And just in case, in terms of numbers, we have more than 450 ETFs linked to our indices, which contain more than US dollar 200 billion invested and linked to our products. And we also calculate more than 14,000 indices, and we have more than 240 employees globally in our offices. Then, until now, we have been awarded the Best Index Provider Award in 2020. And then we also won the Structured Retail Products Award Europe in 2019. And we were also awarded the ETF Service Provider of the Year 2016. Now, coming to the index. So, as I told before as well, Solactive and CarbonCare Asia made this index together, in which we take the carbon expertise from CarbonCare Asia and then apply that to our indexing process to calculate this index. Now, this index is a total market return weighted index, market value weighted index, and we get all the bonds which qualify the two-level ESG filtering process from CarbonCare Asia. After that, to avoid the very small bonds which might have lower liquidity or tradability, we apply some minimum size criteria to each bucket of risk. Once we have all the bonds which have qualified the size criteria, then we take them as part of the index. And we rebalance the index every month. And we rebalance the index at the end of quarter, in which we take all the bonds are reassessed, whereas in the other months, we only evaluate the new issues. And the index comprises approximately 23% of the amount of outstanding of the full universe as of March 2020. Now, looking at the right side, when you can see the bar chart, you can see the impact. So full universe that Xing was talking about is what we have as green and social and sustainability universe. And then after the filtering process, you're left with roughly 50% of the universe. And after the index process, in which we apply size criteria, we are left with roughly 23% of the universe. Now, coming to some of the characteristics of the index. As of March 31, 2020, the index had a yield of 2.6% and duration of 3.9 years. And we can already see that Korea, Australia, and China jointly represented more than 63% of the index portfolio. And the yield contribution from the Indian market was highest at 8.6%. And we roughly have 102 bonds in the index as of March 31, 2020, which will keep on varying based on the filtering process by CarbonCare and the size criteria we apply each month. If you have any further questions on the index, you could reach out to us at the email addresses here or the phone numbers mentioned here. And this sums up our presentation and the webinar on the index. So now we'll leave this platform open to the participants for their question and answering session. Thank you. Okay, so we got one of the questions, which is basically how often do we refresh the components of the index? As I said earlier, we rebalance the index every month. So at the end of every month, we will reassess the index constituents, and then we apply the new constituents to the index.
So we got another question. It's about, are there any statistics of the use process for these bonds? So since we applied the filtering process, our focus is that the bonds with controversial projects or we identify as negative impact projects cannot enter our process. So we do have the statistics on the exclusion reasons as I showed in the pie chart, but for the included bonds, we don't have breakdown of the process. So we got another question. It's about if the issuers delay the impact report, will this affect their inclusion into the index? Which is a yes. We set a grace period for the annual report or the update report disclosure. Once the issue they have delayed report, they will be excluded when we do the rebalancing. So we also got a question. It's about our view about the standard of ESG in China and also the Chinese and international standards on ESG conversion. Yes, it's about the harmonization of the different green bond standards. So actually the Chinese authorities have been talking this for a while, at least 2 years. And there are two levels of harmonization as we see. So first is about the domestic guidelines. Actually, in China, there are two sets of green bond standards. So one is from the PBOC and the other is NDRC. So even these two, they have different definition. The discussed working capital is applicable to the NDRC guideline, which is not aligned with PBOC. So for the Chinese guidelines, I think these two agencies, they are working on the harmonization. And the second level is about the overall Chinese guideline, say the Chinese green project taxonomy should be aligned with the international guidelines. So people may be familiar with the discussion on clean coal, but sadly, we see that the clean coal, even after the harmonization process, the clean coal will be still there. That's the information we know so far.
So we got another question on historical turnover rate of the index. Basically, what we in general notice is that we have roughly 10 new bonds every month. So all I can say is that historical turnover is not as high for the index because there are not many new bonds entering into the index.
So thank you all for attending our webinar. So bye-bye.
And if you want more information on the index, you could definitely log on to solactive.com and you will be able to find index guidelines. And we can even share the index guideline and the index methodology with you once after the webinar. Thank you.